As 2025 draws to a close, a familiar question returns. Will gold prices rise before Christmas and the New Year? This isn't just a concern for big investors. Everyday people see gold as a safe haven, especially during the holiday season when financial planning is top of mind. Gold's role as a symbol of wealth and stability makes its price a hot topic as festivities approach. In many cultures, gold is central to holiday traditions, bought as gifts or investments for the future. Any shift in gold's price gets immediate attention. A rise means more valuable family savings, while the prospect of further increases can spark a buying rush. This December, a major decision from the United States could send gold prices soaring. The main driver, a possible change in U.S. interest rates. We'll break down what interest rates are, how they affect gold, and why this relationship matters now more than ever. This isn't just about numbers, it's about how global decisions impact something tangible in your hand. We'll make it simple, even if you don't follow financial news. We'll also look at expert predictions, including for markets like India, where gold is both cultural and financial. By the end, you'll see why the days before Christmas 2025 could be pivotal for gold. The world is watching to see if gold will truly shine this holiday season. To predict gold's next move, we need to talk about the U.S. Federal Reserve, the country's central bank. One of the Fed's main jobs is to set interest rates, which are simply the cost of borrowing money. When the Fed raises rates, loans get more expensive, slowing the economy and controlling inflation. Lowering rates, on the other hand, makes borrowing cheaper, encouraging spending and investment. The Fed's decisions ripple across the globe, affecting currencies, stock markets, and commodities like gold. As 2025 ends, all eyes are on the Fed's upcoming meeting, with many expecting a rate cut. This expectation is already shifting how people invest, especially in gold. Why cut rates now? Signs of a slowing economy, like weaker job growth, could prompt the Fed to act. Their goal: stable prices and maximum employment. The Fed's decision is the single biggest factor experts cite for a potential gold surge before the new year. Investors are watching every signal, knowing that a rate cut could change the game. The anticipation is building, and the gold market is buzzing. The Fed's move could set off a chain reaction in global markets. Understanding this is key to grasping why gold is in the spotlight. The countdown to the Fed's decision has begun. Here's the key connection. When interest rates go down, gold prices often go up. Gold doesn't pay interest or dividends, it's simply a store of value. When rates are high, investors prefer bonds or savings accounts that offer steady returns. But when the Fed cuts rates, those returns shrink, making gold more attractive by comparison. This is called a lower opportunity cost. Holding gold doesn't seem like a disadvantage when other safe investments pay little. As a result, investors shift money from low-yielding assets into gold, driving up demand and price. Even the expectation of a rate cut can spark buying, as people rush to get in before prices climb further. This dynamic is playing out right now, with the market eagerly awaiting the Fed's announcement. The prospect of lower rates is already fueling excitement in the gold market. Investors are positioning themselves for a potential rally. Gold's appeal grows as traditional returns fade. The market is moving on anticipation, not just action. This is why gold is suddenly back in the spotlight. The relationship is simple: lower rates, higher gold. All eyes are on what happens next. There's another crucial link. Interest rate cuts often weaken the US dollar. Gold is priced in dollars worldwide, so when the dollar falls, gold becomes cheaper for buyers using other currencies. This inverse relationship means a weaker dollar boosts global demand for gold. If the Fed cuts rates, foreign investors may move money out of dollars into other currencies, pushing the dollar down. For buyers in Europe or Asia, a weaker dollar means their money buys more gold. It's like a global sale on gold, increasing demand and driving up prices. This 1-2 punch, lower rates and a weaker dollar, creates powerful momentum for gold. As more international buyers enter the market, the price in dollars rises to meet demand. The Fed's decision could trigger a surge in global gold buying. This is why the gold market is so sensitive to U.S. monetary policy. The dollar's movement is as important as the rate cut itself. Gold's international appeal grows when the dollar slips. The stage is set for a potential rally. Investors worldwide are watching for their moment. The next move could be dramatic. So, what are the experts saying? Most analysts are bullish, expecting gold prices to rise if the Fed cuts rates. Some predict gold could hit record highs, with forecasts of $2,500 per ounce on the COMEX exchange. Anuj Gupta of HDFC Securities is among those making bold predictions, citing historical patterns and market behavior. When rates fall, big investors often shift into gold to protect against lower bond returns and inflation. A surge to $2,500 would grab global attention and could trigger even more buying. These forecasts aren't just guesses, they're based on how markets have reacted in the past. The Fed's decision is the catalyst everyone is watching. Expert sentiment itself can drive prices higher as traders act on these predictions. The market is primed for a major move. All eyes are on the Fed. In India, gold is more than an investment. It's woven into culture and tradition. Any global price surge has an immediate impact on Indian households and markets. Experts predict that if gold hits $2,500 an ounce globally, prices in India could reach $75,000 per 10 grams, a new all-time high. This would boost the wealth of those who already own gold, but make new purchases much more expensive for families and the jewelry industry. The price in India depends on both the global rate and the USD-INR exchange rate, plus local taxes. A weaker dollar could complicate things, but the main driver remains the international price. If global prices soar, Indian prices will follow. The psychological impact of RR 75,000 is huge, changing how people buy, sell, and save. The ripple effect will be felt across the country. Gold's cultural and financial role in India makes this surge especially significant. Right now, the gold market is defined by anticipation. Investors and traders are waiting for the Fed's next move, and this expectation is already supporting prices. Market sentiment is powerful. People are acting on what they believe will happen, not just what has happened. The expectation of a rate cut is now the base case for many. Few want to bet against gold with a major catalyst looming. Daily price movements reflect every new economic signal as the market tries to predict the Fed's decision. The current price, already, factors in much of this expectation. If the Fed cuts rates, prices could jump. If not, gold could drop quickly. For now, the mood is hopeful and watchful. The world is waiting for the next move. The Fed's decision isn't the only factor moving gold. Geopolitical uncertainty, conflicts, political instability, or trade disputes can drive investors to gold as a safe haven. Central banks are also buying gold at record levels to diversify away from the dollar and stabilize reserves. This steady demand provides a strong foundation for prices. Inflation fears add another layer. Gold is seen as a hedge when people worry about rising prices. Even if the economy seems calm, global events can quickly shift demand for gold. All these factors, geopolitics, central bank buying, inflation, work alongside interest rates to shape the outlook. The result is a complex but positive environment for gold. As 2025 ends, these forces are all pushing in gold's favor. The outlook remains bright. As December 8, 2025 arrives, the stage is set for a dramatic finish in the gold market. The expected Fed rate cut is the main driver behind bullish gold forecasts. Lower rates and a weaker dollar could send gold soaring just in time for the holidays. Experts predict $2,500 per ounce globally and $75,000 per 10 grams in India, a major shift in wealth and market dynamics. The mood is one of intense anticipation, with every economic signal watched for clues. Geopolitical tensions, central bank buying, and inflation fears all add support. While nothing is guaranteed, the signs point to a strong rally. The convergence of these factors makes a compelling case for gold. The world is watching and waiting. Gold looks ready to shine this holiday season.